And believe it or not, I am now saying this. I'm saying, and I said,
whoa. Don't go down. You're not going. We're not all meeting up at the clubhouse for a bacon sarnie, are we?
No.
Welcome to the How to Raise Money podcast for anyone who wants to raise other people's money for a business or property venture. Right now, there has never been more money on the planet, and there has never been more opportunity. This podcast will help you put the two together. So, if you need money for your business or property proposals from banks, lenders, angels, whales or dragons, this is the podcast for you.
Welcome to the How to Raise Money podcast with me, Ray McLennan.
And me, Nigel T. Best. Good morning, Ray. How are you doing?
Yes, all good. All good. I feel like I need to say all good in the hood because I've been on Clubhouse recently and it just seems to be, you know what I'm saying? You know what I'm saying?
Yeah.
Nigel, you know what I'm saying? Do you know what I'm saying?
Yeah, that's it. I hear you.
But lots of good stuff happening on there. Lots of good stuff. Meeting a lot of good people and listening into a lot of very, very good conversations and taking part in quite a few as well. Yeah, and in fact, we have a guest with us today.
Who you
Danny
met on there? Yeah.
Yes, Danny Wicks. Right. And I saw Danny's profile on there, his bio. I thought we need to chat. So we did have a bit of a chat. And here he is. So Danny, tell us a bit about yourself.
Yeah, thanks, Ray. Thanks, Nigel. Good to meet you both, and thanks for having me. So, my name's Danny Wicks. I'm a co-founder of a company called Infusion, and we're on a mission to generate £250 million of revenue for businesses between now and 2030. Ex-corporate for my sins, and spent the last 5 years. I see your eyes there. Spent the last 5 years. Building a coaching, training and consultancy business with my business partner, where we effectively help property and construction CEOs and entrepreneurs, CEOs, business leaders to scale and grow their businesses.
Okay. Sounds impressive. And obviously, Ray, my little ears pricked up at the corporate background. I wonder why that could be.
Indeed. Well, fans of this show, and there are tens, would
insert your own units after that. Tens. Yeah.
The figures don't lie, Nigel. The figures don't lie.
No, they don't.
We have lots of people that listen to this podcast all across the world, in America, in Australia, Azerbaijan. I can't remember the list of countries, but there's a lot of people listening.
Pretty good. Hundreds of thousands of downloads. So thank you, everyone.
Yeah, it's good. And we talk about how to raise money. And a sort of theme is that we've mentioned historically the banks and bankers, and we'd all often wanted to speak to, someone from the banks. But the ones that are employed by the banks right now kind of decline because they're not allowed to say things unless it goes through their public relations and so on, which is a real pity because I've spoken to one very prominent CEO from a very prominent bank. And he said to me in a New Zealand accent, mate, he said that, I'd quite like to come on your podcast, your podcast. I'll send you a ticket.
Where's this going, Ray? Are you trying to alienate half the world here?
I'll send you a text. So,
is he in Johannesburg at the moment?
Haven't been able to hear from him yet. So, when I spotted,
well, it is, and I was going to say, Ray, for anyone out there, any bankers out there, this is not Piers Morgan and government ministers. Hey, we're much nastier than that. I mean, much friendlier than that. Yeah.
No, I mean, we're.
You still there, Danny? Danny,
am here.
You still?
I'm ready.
There you go. Phew.
He's not yet going. Internet's down. It's a man down. No,
all right.
See,
well. Okay,
we're not by any stretch of the imagination journalists and have no wish, as Nigel says, to put anyone on the blocks or anything like that. We just want to have a chat. That's really all this is about, is having a chat, saying, what did you do? What have you learned? What nuggets can you pass on? That sort of thing when it comes to raising money, really. So the theme is how to raise money. And so, Danny, can you sort of go back in time tell us a bit about your corporate.
Okay, let me. So I'll take you through a bit of a back in time. Yeah. So I've worked for a number of banks over the years. I worked for French bank, Societe Generale. I worked for Deutsche Bank as a trader in 1999-2000, and then I moved on to RBS and was there the day the bank went down, and then was part of the team that had to restructure and exit a number of assets. So through that time, I experienced some tough times. So I experienced the 9/11 bombings. I was on the trading floor at Deutsche Bank when that happened, and we had offices in Midtown Manhattan, so I experienced that. I was on the trading floor at RBS when the July bombings happened in the UK. And then I was there the day it collapsed. So I'm probably slightly cursed when it comes to banking.
Thanks for coming, Danny. Thank you. We want this podcast to carry on. So bye-bye.
As my granny would say, my granny would say, you've had your three, you're fine.
Yeah.
This is number 4.
Yeah, but for your listeners, I guess through all of those experiences, you deal with, what we call is extreme adversity, right? In all of those instances, and at the time you'll think that it's probably one of the most horrific things that you can go through, particularly some of the terrorism things, but also when the bank went down, there's so many learnings, right? And there's so many things around that have actually led our business to be what our business is today. And the reason why we do what we do today is actually, we want to kind of give back and give the small and medium-sized business of this world some of the real insights and experience that, or from the lessons that we've learned in the corporate space. So,
okay.
Yeah, there's many stories. So I can delve into the ones that you want as much as I can.
Well, yeah, I was going to say just pull back the curtain on some of the biggest learnings. So I think probably it's useful to drill into what you're doing now to say what it was like then and why the big juxtaposition. So the then, the now, the how you've done it.
Yeah, so effectively, I've witnessed over many years cultures in businesses that were, lots of management development, lots of leadership training, lots of corporate BS, if I'm honest. And what I'd seen through that period was work with some amazing people. Now, don't get me wrong, is the perception around bankers in probably 2008 was horrific. But many people that are just, man, woman on the street, work in a bank had no involvement in what happened in terms of the collapse of RBS, right? It was decisions made at a far greater level that created that exposure. But through that experience, I went on to be in the restructuring team, which was effectively they'd ring-fenced £250 billion worth of assets, and that was residential mortgages, commercial real estate, aeroplanes, football clubs, you name it. They were ring-fenced and they were sitting on the balance sheet of RBS, and they had to dispose of them under the government bailout guidelines. So I spent the best part of 3 years traveling the world, working on exiting all these businesses. And it was the most phenomenal experience I probably have gone through. And I remember talking to the CEO at the time, and you think about a division like that, and I was a consultant back in that division, and the CEO said, and I said to the CEO, isn't this where you put all the kind of unperforming people in the bank here? It's kind of, we want to get rid of everything. You'd naturally think, it's non-core, it was called. Let's just put all of the kind of...
Hang on, let's just... Danny, just go back a second.
Right.
Because you've frozen on me. If you... I can't see. If you go back, you say, isn't this where we put all the... If you start with that sentence...
Yeah. So isn't that where we put all the kind of people that we don't want to keep anymore in the business? And he said, no. this is where we need the best people, and we're going to bring the best people. And I said, why is that? He said, well, our job is to do ourselves out of a job. And I said, well, why would you want to do that? He said, well, trust me, once you've gone through this process, you will be able to go and work in any company, in any business, and run any company, because you will have experienced what it takes to break a bank and put it back together again. So it was this amazing experience of traveling the world for best part of 3 years. I was doing Romania, I was doing Chicago, I was doing Ireland, I was doing UK on a regular basis. And it was brilliant. And I'd got to this point of what I would call kind of your corporate ego, even as a consultant, you kind of think you made it a little bit, right? You go, I've kind of got it. And then I actually burnt myself out. So I kind of hit this brick wall. I had 2 young kids and had to effectively step back and reevaluate myself, because I got myself to a point of extreme burnout. And I remember, a couple of instances on a flight to the US where I got into this state of panic, because actually I'd kind of taken this journey to be successful, right? And I was so hungry for success, but at the same time I was leaving behind a family and a lifestyle. And I was in my early 30s then. I was pretty young. Not that I look, much older than that now, but
well, we can't. Actually, I can't see you. You've gone blank.
But anyway, that whole process going through was eye-opening for me, and I realised that actually I was doing something that I loved, but I didn't really have a passion for the corporate world anymore, because it was just moving PowerPoint. Corporate businesses are fantastic at PowerPoint, right? They're the best PowerPoint producers ever, and they hire people that move PowerPoint from one team to another team to another team, right? So actually, where we got to was I ended up stepping away and starting up the business with my business partner, which actually was to give all this good corporate knowledge to small businesses, which is now where we go, where we look at sort of small to medium-sized business, and we give them effectively a restructuring route to growth. And that's through a number of reasons. That's through organic growth of their client base, that's restructuring their systems, that's looking at financing options, a huge number of things that we do. But effectively, we've harnessed the corporate experience and brought it into the SME market. That's a whistle-stop tour.
Oh, all right. I'm just going to say, Danny, can you just check at your end? Are you seeing any video?
I'm seeing you too.
Can you see yourself? Because you've gone.
I can't see myself, no.
No, we can hear you loud and clear.
Hang on, you've gone.
You'll come back. You'll jump back in. Just in time for the hard questions.
Yeah, that's it.
I'm back.
All right, he's back. So
1, 2, 3. Back in the room. There we go.
Back in the room.
So Danny, you were there. You had the corporate burnout. Right. I mean, one of the things that strikes me is that's quite a common theme, isn't it, of people going for the high pressure, high money, high return, high risk, high reward roles that people don't seem to last particularly a long time with their sanity and health intact on that one. It's quite scary, isn't it?
Oh, it is. It is. And a lot of the people we speak to have had very similar experiences, especially sort of anxiety, palpitations, that sort of thing. And I think it's that desire to get better, and the breakthroughs come usually after that. And I don't mean that a breakthrough is in a bad way, a breakthrough is in a good way, because you realize your tolerance levels, but you also realize what not to do. You also realize what works and what doesn't work. And it's a valuable life lesson. Some people only discover that at the very end of their working careers. So in a sense, to discover it early on can be good. If you look at, there's Danny, who discovered it early on and is now turning that round and saying, right, let's use it for good purposes. Yeah. So one of the questions I have about that, about your first part of your talk there, Danny, is you're helping companies to restructure. How do you do that in these times when a company might have to restructure and its income has been completely cut off? Their core business just cannot function simply because the government have locked the economy down. What advice do you give them? What can you actually say in those circumstances?
It depends, right? So it depends where they are in their overall, is their balance sheet strong? Do they have enough liquidity? So we've done an exercise with a number of companies, and actually it was kind of gratis at the point of the last lockdown, where we've built effectively a business, we'd call it business resilience sort of checklist, which effectively is your key things that you have to check when you're at the point of crisis, right? So that's going to be your liquidity position. How many days cash flow have you got? Your supply chain. Now, where are you with your payments in your supply chain? Your staff, your technology contingency. So we have a complete checklist that we built. And effectively, if you can imagine, when the banks went down, liquidity was the problem, right? That was where the run on the banks happened. Through that, banks over the last 10, 15 years or so have been building liquidity, right, to be able to undertake a severe stress, which is what's going on now. That's why the banks have effectively at the moment stood the test of time, because they've got enough liquidity. So one of the things we do is have a real deep dive on the business to understand where they're at. Now, if they are in intensive care, right, and that's the reality, there are many businesses that do similar to us, that will take on a client to think that they can perform miracles, right? And that just isn't the case. If a business is not well managed before the crisis, right, it's going to be bloody difficult to get it out of the crisis. So the deep dive is a kind of, can we help you? Because sometimes it's a complete restructuring insolvency conversation, which is not our area, or it's looking at what the government have put in place in terms of the funding options. And in fact, we've seen for us last year, the companies that are looking to restructure and regrow leverage the use of bounce back on C-bills to bring that capital investment into the business to restructure and grow. Does that make sense in terms of your question?
Yes, it does. So in terms of the banks, now in 2008-2009, I've used the analogy and said this on Facebook that, effectively the banks turned around to the government and said, we need 500 billion by tomorrow or the ATM machines won't work and the whole system will collapse. And the government said, here's 500 billion. And then they got on with it. And it seemed to the outside world that they basically all got big fat bonuses. And, and a lot of businesses had commercial loans that were simply called up. I know you said you had to restructure and assets had to be sold, etc. But there were businesses trading then that were paying those loans, doing absolutely fine. And yet, the banks basically called them up and said, we need to be paid or else we'll have to sell the asset. Now, this time round, it's effectively UK PLC that's turned around to the government and said, we need money or we're going to go down. And the government said, yep, okay, well, we'll make 350 billion available and we'll let the banks administer it. And what the banks are doing now is they've effectively put in all these barriers to getting the money. I know there's C-bills and the bounce backs are different, but in terms of C-bills and things, I've spoken to a lot of companies that said, it's called a Corona business interruption loan. Our business has not only been interrupted, it's been decimated, but we don't qualify because the banks have put additional barriers in place. Have you come across that? And if so, how does a business get around that? Well,
we've come across, so we actually have one of our clients has experienced that, and it's been challenging because there's certain banks we know that will apply a stricter lending criteria than other banks, right? So not naming names, but they will apply a stricter lending criteria, which has meant that companies that are now trying to access these finances are having to go through so much administration. Now, just to kind of flip it on its head a little bit, the banks are set up with lending criteria, lending practices in place, right? So they have standard lending criteria and assessment criteria. And then they base that on what they call risk-weighted assets. So they'll say, right, based on this number of assets that we've got, this is what our credit risk is associated to it. I don't want to talk too much technical jargon here. And then we can apply an RWA, what they call a calculation to assets, which then enables them, right, to then start to assess their lending criteria and make decisions around credit risk. So what's happened, right, after 2008, you'll see lending is becoming tighter. Mortgages will become stricter. more processes are being in place. But what banks have had to do, the ones that have been very agile and have the right systems and structures in place, have been able to quickly lend money because they've been able to quickly flip on their heads from a technology and process standpoint, whereas some of the bigger banks have really struggled because they're now having to put in these new processes in place, which is not necessarily the fact that they won't lend it, it's the fact that the process is inefficient.
Okay.
Good one.
Yeah, well, we've spoken about that, Ray, haven't we? The fact that some seem to be sailing with the wind on the technology front and others seem to be still battling somewhat against it is how it appears and how it translates to customer service. But, I mean, the elephant in the room, if we go back to 2008, 2010, that sort of period, obviously within RBS, before RBS got in the position it did, it was gung-ho, hell for leather. And then when things came in, RBS, as has been reported with the Tomlinson report to the House of Commons or the MPs or whatever, and the assessment of how they performed, and in particular that GRG department within RBS. Looking back on that, how would you assess the behaviour and performance of that particular branch, which was meant to be you can't beat an ego-driven global restructuring group as a moniker, as a title, but how would you reflect on the behaviour and performance of that department?
Well, it's a great question, and then the way I'm going to answer this question is, what was interesting in the structure of the restructuring of the business was that department was outside. It was effectively outside of the non-core area. It was a global restructuring group. So the division that I actually was in was completely separate to GRG and exactly what they're doing. So I have no, I have no understanding of how they went about their practices. What I do know is in the non-core division of RBS is, that was a very, very rigorous process around selling assets, and it had a number of approvals that had to go through around any asset sale. In the GRG piece, my information is, as much as anyone else has read, probably like you guys, is through the nationals. That's about it, and I can answer that.
In terms of you being slightly separate from it, from a kind of a business point of view, and the way that you saw things unfold, what was your take then on was that good stewardship of the bank and the businesses involved? Because there must be something that's triggered you when you mention I want to give back to businesses. Is that as a result of seeing something where you thought, hang on, that wasn't right, and there's a better way of doing things?
I wouldn't say it was that specifically. What I've seen post that, probably more so in the last 6 months, is the fact that there are small businesses in the UK right now that, not through their own fault, are at death's door as a business. And for me and our business, that doesn't quite sit right with our own values as individuals. And for us is, some of these businesses last February were good businesses. Right, they were good working businesses. Right, we all know many people that have had one day they're doing very well, and it's everything. The wind's been taken out of their sails very, very quickly. So for me, is what happened with we took a good hard look at ourselves in the mirror, come last sort of April, May time, and said, we've kind of got a bit of a mission and a vision around this business that we've put to place, but is it really passionate about what we believe and what we want to do? And it was through that we just said, look, there's this whole economy that has to be rebuilt now, right? And we don't want to just help the businesses that are doing well. We want to help the businesses that are good businesses that want to now rebuild and regrow. And we believe, through our experience and in that non-core division of RBS, where we kind of understood, right, if you tweak that, right, it equals that. So, for example, if we look at how your management structure is in a business and how you've got people performing in your business and how we optimize that, which is what we do, is effectively a lot of what we do is about getting the leaders operating as effectively as possible and managing and leading teams as effectively as possible. Because a business, no matter if it's a technology business, is still a people business, right? Then we can help them understand, what it means to run a business with maybe higher overheads, maybe with too much overheads, right? And how you can restructure that. So throughout our journey, there may be differences of opinion with businesses, but actually that they may have to remove people to regrow again from that. Now, what I want to do and what we want to do is get behind the UK economy. And, there's a lot of businesses that haven't had access to help, right? Just haven't been able to gain access to help. Gyms, good example. Sports facilities, good example. And a lot of the big boys, right? And I don't know myself, I'm sure there's a lot of big boys that have been bailed out here that none of us know about right now, right? None of us will know about. And for me, is Mr. UK, the UK economy is as good as its SME base, effectively. Banks require the SMEs, right? I think it's pretty much 70% of UK GDP is driven by small to medium sized business.
It's right? Nearly always the Pareto equation, isn't it?
Yeah. So for me, and I get very passionate about this. There's a duty of care, and there is a leadership responsibility that people need to step up and be counted for, right? And I'm prepared. And I've said it before. Put my head above the parapet as a business and say, we will help. I haven't got a bucket full of money to give you, but what I've got is a bucket load of experience and my business partner in these kinds of things right now. So use it. And coming on here and talking to you guys, and I think Ray probably got behind that message, this is the message that we want to get behind. It's really important.
Well, taking that message, Danny, then is it? Could you say it would be easier for a business to not only be more resilient and survive, but also be in a stronger position to raise money in the future if they are effectively following your steps and getting themselves into a better position? Because are you sort of using your knowledge and experience of what banks are looking for whenever they're lending money to say, well, this is how you need to do it because this will answer every question they've got. It'll make raising money easier. Is that the kind of a brief synopsis of a potential benefit of working with yourself?
Absolutely. So we do, a lot of what we do is work with business owners that have a vision to step away or exit and sell the business. Now, to exit and sell the business, it's got to be not reliant on the business owner, first of all, right? Because you've got to be able to. Two, it's got to run like a well-oiled machine. So, to avoid price chipping when someone comes in and lifts up the bonnet. Now, that's around your people, it's around your process, it's about your systems. Now, if you've got all of those things in place, right, and the likelihood to get a good price, right, is far greater through my experience. Just to give you an example, before RBS sold, we sold billions of pounds worth of assets. We spent a year, what we called enabling. And what that was going into every business and making sure it was as optimized as possible. And what I mean by that is every single data point can be reconciled back. Every single data point. So if you came in and said, right, I want to look at this, we can go, right, we've got the data for that. Like I had 350 million of commercial real estate in the US. Right, they have big. If you've got real estate, big commercial environmental reports, big rent roll reports. Like I had a team out there effectively reconciling back to system. We sold that portfolio for par at 100% par price for 350 million. That's because we got the asset in such a good position that when Wells Fargo, who bought it, came in and did their due diligence, they couldn't find any holes in the business. It was like, it's a good asset. We're just selling the asset. So now if you think of that and roll that forward to these small businesses, we just reverse engineer the process. If you can know how to sell a business, you can reverse engineer it, the sales process, into create a high performing business.
Yeah, good point. Could I then ask a specific question about let's say, 3 sectors that are being hit right now and what your advice would be. So
Yes.
Small hotel group, for example, managed efficiently, good turnover, good profit margin, not heavily dependent on staff, etc. Assets, more than double. So loan to value less than 50%, for example. So that'd be the first one. The second one might be a bus company who used to ferry people around and obviously can't do that anymore. And they've got the assets, the buses, they're all sitting there. They're being leased. And, they've got these assets that are effectively deteriorating assets rather than growing assets against leasing. So of those two scenarios, pick one and then tell us what sort of advice you might give.
I think those two scenarios, it's a great question. Those two scenarios, if you think of those businesses right now, what are their options? Right, just think of it. What are the options for a hotel group? Right, so at this moment in time, they can support the NHS, which I know hotels are doing, but effectively they are sitting dormant right now. And I actually believe, and this is a terrible thing to say, it's like the events industry. They need leniency, one, from their lenders, effectively. They need leniency from their lenders, and I think there's a duty of care there. Two, they need to be ready, first of all. My view would be, don't sit on your hands now. Think about now, what is this market going to look like when we come back, right? And have a very, very clear strategy. So the companies that have survived, I believe, and what we've seen in the last 12 months, I wouldn't say thrive, but survived and come through it, are the ones that had a strategy, a clear strategy. And the reason why they survived is they knew they had data to make decisions, right? So they said, here's my strategy, right, this has happened. And I hate this word, it's a swear word now, pivot, right? It's the fucking devil's word, right? But they know what data they've got now to make decisions, right? And they've managed to change, rather than pivot, change their business model to reflect that, because they knew what the impact was. So for me, you've got a hotel right now that's sitting there, empty. It's probably furloughed all of its staff. It cannot do anything apart from provide value to the UK economy and support NHS services. Would be double down on your strategy, double down on how you can be efficient when you come back, put in place what we call the foundations, right? Because every business can be leaner. A Formula One car doesn't go into a pit every week and everyone goes, it takes 2.x seconds to change the tyres. We're happy with that. It's about continuous improvement. It's always about how can I go faster. So for me, those industries and those businesses now should be leveraging their time they have to come back much more efficient, much more leaner, and have leniency from the lenders, and hopefully have access to government funding. I'm not a specific expert in the hotel sector, but that would be my advice. If I'm sitting with people running hotels now, it'd be like, let's just think, what can we control?
Yeah, and one of the things that I'm finding across the board, because I speak to a lot of businesses as well, a lot of people, is that there is a sense of leniency, if you will. And of course, this time it's different round, because there is, they can't be done for wrongful trading. There's a ban on doing anything on wrongful trading. There's also they cannot. There's wrongful trading, and let me just check. What have we got? Oh yeah, the winding up procedures have been put in place. You can't wind anybody up until the end of March, and in fact, all the courts are shut. So there seems to be no appetite out there for anyone to chase anybody for a debt when the business, it's no fault of theirs, effectively. So yeah, that's good advice there. What about what about the bus company? What about a bus company that's got the assets that are sitting there? We've suggested to banks, and I've suggested it on here and also in Facebook and forums and things, that there should be a loan hibernation scheme. We're effectively in a financial winter where nothing can grow. So therefore, it makes sense to hibernate the loans. So rather than the government pumping money out, just say, look, let's have a loan hibernation scheme for 12 months or 6 months even. And I know a lot of people who are listening to this, if you're struggling to pay mortgages or other loans, that they will get, they will defer, or that they'll put as it's called, the banks call it a moratorium on your mortgage payment for 6 months. Now, for a lot of people, and I spoke to a few in the last few weeks, that's come to an end. And the 6 months has come to an end, but the lockdown hasn't ended. It's gone on far longer than anybody thinks. So the leniency can only go so far, unless there is something at the top. What do you say to that bus company who've got the assets that are there? They're waiting because they know, like the hotels know, that once this is lifted, there's going to be people are going to be stir crazy. They're just going to want to get out. There's going to be people traveling all over the country, visiting friends, staying in hotels, Airbnbs. That sector seems to think it's going to thrive. Bus companies, etc., they're all waiting, but they've got to hang on until such time as they can be released. So what do you say in the meantime to them, the bus company?
Again, it's such a horrific circumstance for a bus company, because again, no fault of their own, they've been taken out of the market completely, right? Had this not happened, they would have been operating the same way, if not continuing. I think they will thrive, if I'm honest, beyond COVID. I think we'll see a lot more UK tourism, a lot more. I certainly will do myself, because I know we've missed out on that. But I think, again, it comes back to what really are the options they've got right now, right? So they cannot be used. They cannot really be on the market. So that asset is, as you say, devaluing. It comes back, if we think about it, it's quite simple. I think, all roads lead to two areas. The government and banks, right? That's it. So what we've got to be mindful of the situation right now, and this is where banks will be thinking, is I don't want another credit crisis on my hands, right? So the reason why the government are pumping money through banks out to people, right, is exactly that, right? You're going to have your exposure of a significant credit exposure. So again, you've got banks will be going to government saying, look, we've got a liquidity buffer, which is fine. We can we've got the rainy day and we've got £90 billion liquidity or whatever it is, but we've got lenders or borrowers here that are struggling. We can't hold all that. We can't. Our risk exposure is too great. So this is where our friend Rishi and our friend Boris, right, if they are our friends, need to think creatively, in my views. And I think your idea, the loan hibernation, is, if you really think about how much creativity has been done right now. We've had CBILS, right? You've got some universal credit. You've got bounce backs, right? And we're in our third lockdown.
Mm. And the self-employed scheme, there was an SEISS, I think, as well.
SEIS. So that's kind of...
And the VAT free. Yeah, so they've
you've got a bit of that exemption, you've got personal tax exemption, but we're a year down the line now, nearly. And we're going to be on the year down the line, and then people are going to have to recover. So my question, kind of back to things, is, we had war bonds that were done in the war. We had all of these different things that were long dated, right? That didn't really. They've only just been paid back now, war bonds, right? And I'm not saying that they're the answer, but what we can't afford is this happens, up goes stamp duty again, up goes taxes again, right? When people haven't even got their head out of the water and time to breathe, right? Mm. So for me, if I'm sitting there now going, so what is your strategy, Mr. Government, right? Because we're trying to figure out ours, and this comes back to our 250 million and your bus company. What's your strategy, right? What is your path? And I'm not talking about the pandemic specific; it's pandemic related. But what is show me your 12-month roadmap of what you're going to provide to the UK economy and businesses, right? to give people that are sitting there that are going to be struggling with stress, anxiety, mental health, suicides, right? Worrying about putting food on the table.
Yeah, exactly.
So for me, just one point. For me, as a leader, you have a duty to set a direction and communicate. I said my piece. Sorry.
Well, my solution
I was going to say, normally we don't say our piece on this podcast. We're all very polite, aren't we, Ray? We never normally say how it is.
Well, my solution was twofold. One, it was to hibernate loans, right? A loan hibernation scheme. And what the government would do there, so let's say the bank have a loan out with someone and it's at 6%, okay? The loan's at 6%. The loan is in default, so technically the bank could go for penalty interest or something like that. Okay, forget the penalty interest, hibernate the loan. What does the money cost the bank? And the bank is probably paying 2% for that money from the markets, whatever, not even that, all right? I mean, interest rates at the moment are so minuscule that they're probably paying 1% for the money. If they're borrowing, 2 billion, they're probably paying 1%. So if the government stepped in and said, right, loan hibernation scheme, and we'll cover that 1%, that's a much cheaper deal for them because nobody can do anything. They may as well hibernate it for 6-12 months. But the second thing I would say is that when money is put out there, it's been put in the hands of the banks, and the banks are putting up these admin barriers, and that's causing more stress than anything. What I suggested was that for all the self-employed small businesses that are out there that are struggling, that the banks are not helping, there should be an emergency fund put in place. And I said that someone should run that, and that person should be someone like Sir Alan Sugar, who's got the infrastructure behind him, he's got the people behind him, but he's also the kind of guy that can make sense of some of the things that the bank don't make sense of. I'll give you one example. A family company, they'd been in business for 70 years with the same bank. For legacy reasons, they were asked to incorporate because of grandchildren and so on. They turned over $500,000 a year, give or take. Okay, they incorporated in January last year. Same bank, business affected badly. Go to the bank, say, Corona Business Interruption Loan, please. And the bank says, no, you don't qualify because you don't have any accounts. And they're like, but we've been with you for 70 years. You've seen our accounts. And the bank goes, computer says no. Now, that is one of those kind of, I've got lots of them, but that's the one that strikes me as being the most insane. You would think the manager could turn around and go, a bit of common sense here. That's where someone like Sir Alan Sugar or his team could, be the arbitrator and bang heads together and get stuff done. So there you are. That's my tuppence worth.
I think it's
okay. Back in the box, right?
I think that creativity is required. That's what I mean. Is entrepreneurship creativity rather than standard kind of corporate public thinking. If you know what I mean. It needs. Now there are many people out there that have done very, very well that could be brought in to help in these scenarios, that have created significant businesses. And the thing is and built it from the ground up. So they'll know if you built it from the ground up, you know of all the pains of along that way. A lot of people making these decisions haven't built something from ground up, right? They've come in at a level when it's already operating, right?
Yeah.
So they're not going to understand that pain.
Yeah, no, I see that when sometimes someone comes from a corporate background and wants to start their own business, and they do a presentation to us to raise money, and you can just see and question them a few times, and they haven't got a clue. They want to raise £10 million to start their business, and you're like, but you haven't started anything. You've gone from university, corporate level, and now you want to do your own business. You really need. It's like in the housing market. They say before you start building commercial buildings, you have to have a buy-to-let. Have a buy-to-let, have an HMO, see what it's like, cut your teeth, learn the lessons, and then move gradually up. Don't just go straight into the biggest commercial conversion of your life, because it's the same thing. And yet they fail to grasp that. But yeah. I get your point. I like war bonds, Danny. I think that's a great idea. I think we are, the analogy is used that we're in a war and it's always a fight against the virus and yada, yada. And the idea of a war bond, I think, is quite a good one. We need long term, something, even a war bond that lasted 5 years would be fine. You know, it doesn't have to be.
I think they were 3.5% irredeemable at one point, weren't they?
Yeah, I can't remember. But we've got to protect. I've got 2 kids, 15, 13. You know, I sit here concerned about their futures right now.
Well, I would suggest putting them out to work, because they're going to be doing it for the next 80 years. So you might as well get them used to it.
But
I think you need to read the book Financial Freedom by.
Yeah, well, I've had that conversation with my son. I've said to him that you know, you've got this kind of hiatus period where are you doing exams? Are you not doing exams? That's another subject altogether. How ridiculous that all is. But I said, look, now's the time to be creative, right? You know, start. Get on Clubhouse. Listen to the likes of Rob Moore that's setting up foundations. Listen to the likes of people that are trying to inspire entrepreneurship in the country, and I'm all for that. So the problem is his dad saying it. So when it's your dad telling you that, it's never cool.
I know.
Yeah, you can't be a prophet in your own house. But I mean, just to explain to the kids and just say, look, we've been digging a big hole for a long time. We are now digging at a faster pace. We are now getting considerably deeper, and it is wider. And if it's not the environment that we're going to push into this hole, we are certainly going to push a large amount of debt. And enjoy your life living in this hole that we have created for you. Ta-da! You know, and smile, and then say, "What do you want for your tea?"
Yeah. I think that would.
Yeah, but they'll just walk out, leave the lights on in their bedroom because Dad's paying them.
Yeah, exactly.
Lights off. Put the bloody light.
Yeah, turn the heating up.
The big light as well. What are you leaving the big light on?
God, you don't need the big light until you get to our age. You know.
Yeah, you can't.
All right, to finish off and sort of, I hate that word, pivot. To finish off and
pivot. We're spinning like tops in this country. We are that much.
Like tops. Danny, Arsenal Football Club.
Yes.
You had that. What's that? You had that in your bio.
Yeah, so for my sins,
warning. You know, most people hate Gooners, so you're on shaky ground already. So you've got to make a hell of an anecdote to rescue this one. Come on, world superstar.
So my dad's family are from East Linton, so it was kind of, even though Arsenal were from South London originally, I get that all the time, but yeah, Arsenal fan. I'm a failed footballer myself, believe it or not. We all had those dreams, but yeah, Arsenal fan. It's a terrible time to be an Arsenal fan. I waited 10 years to get a season ticket, and then from the year we got a season ticket for my son and daughter, the collapse began. It's like, it's been horrific, right? So I don't talk with enthusiasm about Arsenal Football Club right now, because that's a culture that needs some adjustment, which I think they're going through.
It's I think Piers Morgan is on the telly shouting about it all the time, so I don't think you need to add anything to it.
No.
But on the football side, at least you gave it a go, did you?
Yeah, so I was at Watford from 8 till a youth player, effectively, and then I got the boot they kicked me out very, very, as I thought I was on my whole life was about football. And I got called into a boot room. I'll never forget the day. Called into a boot room by Kenny Jackett, who I think is now the Portsmouth manager. And this is what really inspires me pretty much a lot every day is when you're sort of, I think I was 16, 17, they turn around and say to you, you're not going to make it. Why don't you go and learn a trade? Right? You're too small.
Ouch.
Right? That's what you're too small. You're not going to make it. Go and learn. I'll never forget those words. In a boot room at Vicarage Road, those were the words. And I walked out of there, and I'll never forget that day, because it was like one of them. I'm still today doing that kind of up yours to them, going, I'll show you lot. So, it was tough at 16 to take that.
Yeah, and you were taller than Lionel Messi. You should have said that.
Yeah. But it's amazing now, moving all the way forward these years is, it was that time. Remember when Cambridge United everyone had big, you've got to be a 6'4" lump to play football. And I was a 5'6", short arse basically. That could play football, but just wasn't big enough. So I would say to my son is, in today's day and age, I probably would have made it. So yeah, and I had an opportunity to sign for Peterborough, and they came to me, and I turned it down to stay at Watford before that, and that was a big regret I have now, because I could have taken a different path. But anyway.
Do you? I don't suppose you follow darts. I mean, I love my darts. You know, I'm a Yorkshireman, so what else could I do? But
yes, you could have won.
thank you. Yeah,
Bully's special prize.
Yeah.
Oh, sorry, Nigel. Did I just steal your thunder there?
No. I wasn't going to do any Jimboing or bullseye things. But no, on the darts side of things, I don't know if you saw right at the beginning of the year. So over the Christmas period, they hold the World Championships, and the winner this year is a Welsh guy called Gerwyn Price, who had played rugby he got to Pro 14 level, so I think he played a few hundred times for Neath and at a good level in Welsh rugby. And before he got to kind of the latter stages of the tournament, they asked him, you know, you tried at rugby, and he said, yeah, I wish I'd known a few things when I was younger, because I would have done more, and I would trade everything for a cap for playing for Wales. And then they interviewed him after he'd won the world title and £500,000, and he'd only started playing darts because he wanted to earn a bit of money. And he said, yeah, I think I probably changed my mind now, but swapping everything for that Welsh cap. But the interesting thing from that, where I'm coming from, was, is there anything you could have told yourself as a 16-year-old or 15-year-old that you had to concentrate on more? Because Ray had some great comments about how you influence or pre-frame things with the coach so that they take you under their wing a little bit more.
Is there anything what I would look back on is I wasn't I was a bright person, right? I was quite sharp, but I didn't put the effort in. Like I did not put the effort in at school. Like it was like, you know, I was the county captain at football. I was out of school half the time playing football. So it wasn't important to me. But when I look back now, I'd go, probably should have worked a bit harder. But I have to say, I am a believer that you know, I went out to work and I started in a blooming newspaper advertising, selling advertising space. Right, in the smoky pits of near Borough Station, like it was horrific, right? And I'll never forget having to be phoning up trying to sell advertising space. And I wouldn't change any of that now. If I look back, it was like that grounding was so brilliant. And I want to encourage young kids at 15, 16 to get, if we can create this, to get out there and actually learn about business and be in business. You know, you think of the education system now. It's so outdated. It really is so outdated. Like you don't learn really anything that's transferable unless you're going into something specific around science or engineering. Nothing really is transferable into business. That's why I said to my son, you've got to do business studies. If there's anything you're going to do, just do business studies. So you've got some understanding. So I just think that there's so much more that can be done in education now, and I'd love to help in any way, particularly the younger generation, sort of dig ourselves out of this big hole, Nigel, as you say.
Well,
no. I think we've got plenty of time to go deeper in that hole. Yeah. You know.
All right. Yeah. Well, we're almost at the end. I think we have to wind up now.
I was going to say, Danny, top tip for someone who is in trouble at this point with the scenario and where they are. What would you say they should do?
Okay, so there's a couple of things. One, it's lonely being a business owner, and no one likes to admit that. So surround yourself with a absolutely strong peer group. I found through Clubhouse, meeting people like Ray, that if you surround yourself with a strong peer group, it really helps, right? So one, I would do that. Two, I would say step back out of your own body if you can, and look at your business as though someone else is looking at your business, and ask yourself some questions about it. Does it still work? Right? Does it still work? Is what I'm doing still a valid proposition? Right? What are my strengths? What are my weaknesses? What are the opportunities? What are the threats? A very simple step back SWOT analysis, as you call it, on yourself and the business, and then just be prepared to make some decisions based on, and get help. Like there's loads of people out there that are willing to help. Don't be afraid to ask for help. There's probably three.
Yeah, you mentioned your checklist earlier on that you were using, and you were giving that for free. So, is there any way people can get hold of that? Is there any way that people can contact you? Normally, Nigel does this bit. So, Nigel, you might want to do this bit.
Yeah, thanks, Ray. So, hang on. What I'm going to do is, here we go. So, first of all, up on the screen, can you see that, guys?
Yes, I can see that. Yes.
There you go. There's our link to the upcoming How to Raise Money book. So www.htRmoney.com/book. And we're getting quite a few people on the list. So thank you. And what I would say then is, what is a good place? What's the best place to contact you, Danny? And if there's anything you can share with us, what we'll do is we'll add it to our website for resources and links to other people. So best place. So there's two places really. I'm now saying three, believe it or not, which I never thought I'd say. So the first place is you can go to our website, www.infusion-group.co.uk, and there is a contact us there, and which we can then provide any the business resilience checklist to anyone via LinkedIn. Danny Wicks on LinkedIn. You can do that. And believe it or not, I am now saying this. I'm saying, and I said, whoa! Don't go down. You're not going. We're not all meeting up at the clubhouse for a bacon sarnie, are we?
No. So here we go. But I am. But you can, and I said I can't remember. You can actually go to my Instagram, which is Danny Wicks on Instagram, and contact me directly via Instagram. Now, if anyone in my game or what we do thought we would be leveraging Instagram as a platform for our own business in 2020, someone said that to me in December. I'd gone, "You're having a laugh," right? So it just shows sometimes how things change. So yeah, via there. Also, I run regular, believe it or not now, regular Clubhouse sessions. Thursday 4:00. One called UK Property Scale Up, which is finance, build, scale, sell, regular on a Thursday. And Ray would love you on there, or Nigel on there to be a mod. We're going to have a number of mods that are going to be on there coming on. And it's all about kind of building and scaling property businesses. So, yeah. And I never thought I'd be saying, come join my Clubhouse room.
There we go. So I think we should probably finish on this.
Pivot. Pivot. Yeah, he's holding up. Yeah.
that is correct.
So you found that on Friends. Mind you, you watch Friends, don't you, Ray? You've watched it.
Up.
You know, Ray is just a Friends guru. If he goes on Mastermind, I bet his specialized subject would be Friends.
But you can't beat a bit of Friends. Pivot.
Yeah, you can with a big stick.
Or what's the sunbed one's even better, where he's standing getting sprayed in the sun. See, I'm giving away all the things now. I'm Friends.
I think it's time to pull a veil over this one.
So.
Thank you for
having me.
Okay, well, great. Thank you, Dan, for being here. Hope you enjoyed that. Hope you get a few followers, few listeners, few people looking for that resource. That'd be good. All right. So
that's great.
That's the end of the How to Raise Money podcast. I have been Ray McLennan.
I'm still Nigel T. Best. We'll see you later.
And we had Danny Wicks. So bye from him as well.
Cheers, guys. Thank you.
Thank you for listening to the How to Raise Money podcast. It's made for people who want to raise money as debt or investment equity for their business or property proposal or empire. The website has all the useful links and underlying research, and you can get downloads of the checklists and other useful information. See you next time, where we can show you how to raise money. There is abundance. There is money enough for everyone on the planet. The question is, who has yours?